Welcome back to Block 101, Home of Value Investing in Disruptive Innovation and Tech. Okay, so I'm just going to go through my 7 top stories of the week ending 20th of August 2023. Let's start with this. There's not been much news, to be fair, not worth talking about, but we'll still do this. Okay, so first story. Record UK wage growth fuels inflation concerns. All right. Markets pricing further interest rate rise after data shows private sector pay rose 8.2% in 3 months to June. Okay. Now, I've spoken about inflation and interest rates before, and it's in another video, okay, where I did an explainer. I will link it in the description. If you haven't seen it, please check it out. And I spoke and said that if we come into a wage price spiral, which is where, let's say, for instance, you've got inflation, which is at what, 10%. See, employees, workers are going to demand higher wages, which will be around 10%. Do you know what I mean? To combat inflation and the cost of living. Yeah, and this is what we're seeing. So what happens is you end up in a spiral. So because wages are increasing, prices will increase, and it's just a never-ending cycle until people start losing jobs, and it doesn't become feasible anymore for a company to continue to operate. And this is why AI was so critical when, ChatGPT and you had other AI and products and services launching at the start of the year, because they would lead to greater efficiency gains. Okay, it would remove the necessity of having people in particular roles, okay, and enable these companies to still operate and maintain their profit margins. All right, you heard Mark Zuckerberg speak earlier in the year on Facebook's year of efficiency. So this year of efficiency is basically creating AI models or creating AI products which can replace the work of staff, and therefore those staff would not necessarily be needed. Wages tends to be the most expensive variable cost, okay? So imagine if you can replace that with artificial intelligence, and you don't have to worry about people being sick. You don't have to worry about, people not showing up or outputting 50% on a day and not working to their maximum. You don't have to be concerned about that at all. Do you understand what I'm saying? So artificial intelligence is a game changer, because you can remove all those people. They're not needed anymore, right? It will become a scenario where you either have to be part of the executive team, or you're going to be, simple data entry, or, an entry level position. Okay, there's not going to be no middle management team. It's not necessary. It's not needed. You can remove that layer now. But yeah, UK wages grew much more than expected and at a record annual pace in the 3 months to June, according to official figures that are likely to reinforce the Bank of England's concerns over pressures fueling inflation. In April to June, annual growth in regular pay, which excludes bonuses, was 7.8%, according to data published on Tuesday by the Office for National Statistics. It is the highest annual growth rate since comparable records began in 2001 and pushed nominal pay above price growth for the first time in more than a year. Economists polled by Reuters had forecasted increases in total and regular pay for 7.3% and 7.4% respectively. Wage growth. The bigger than expected figures on pay resulted in market expectations for a 0.25 percentage point rise in interest rates in September, jumping to 99%. Yeah, I'm not surprised at all. Despite clear signs that the labour market continued to loosen with an unexpected rise in unemployment, falling inactivity, and declining employment. Yeah, wage price spiral. It's not what we wanted. So inflation is going to be sticky because of this. Yeah, UK employers' second story, or it's in relation to the first story, but UK employees increasingly resort to bidding wars to retain staff, say survey. Yeah, research by HR body appears to contradict data suggesting labour market is cooling. In the past year, 40% of employers have made a counter offer to try keep an employee who has received a job offer elsewhere, according to a quarterly survey published on Monday by the Chartered Institute of Personnel and Development. Within this group, more than half had used counter offers more frequently than in the past year, and a quarter are expected to use the tactic more often in the year ahead. Yeah. And this is the thing, like when you've got, let's say, highly qualified staff for a particular role, yeah, and they're in high demand, it's basic economic principles of supply and demand, right? So if I've got another company that is willing to pay me more, yeah, then as an employee, yeah, who's currently experiencing the effects of inflation and the cost of living crisis, I would be more than willing to use that as a leverage to get a higher salary or to command a higher salary from my current employer. Now, there's other factors to consider when moving to a new position, all right? Because you've already probably established or built up a sense of goodwill within your existing company. And although the other company might be offering you more money, you've got to take into consideration the intangibles, all right? So you currently know the team you're working with, especially if they're a decent team. Like if there's nothing detrimental about them or negative, if it's not affecting your mental health, it doesn't really make sense to move to a new company, even if they're paying you more money, if the team that you're going to be the team you'll be moving into is going to be shit, all right? Or not as great as the current team that you're with, right? But then again, you probably wouldn't be looking for a new job if things were perfect in the company that you are. Although some do move for, new experiences, I guess. So, but yeah, after raising interest rates to 5.25%, earlier this month, the Bank of England said it would be monitoring the tightness of labour market conditions and the behaviour of wage growth and services prices for evidence of more persistent inflationary pressures that would require further rate increases. Yeah, we've seen that. More than 2/5 of employers said they had vacancies they were struggling to fill, with the most acute problem seen in education, transport, and storage, and across the public sector. The median expected increase in basic pay remains steady at 5%, the highest since the survey began running in 2010. However, a growing share of employers said they were not sure whether they would carry on raising pay and that it would depend on their organization's performance. Counter-offers are most common in London, but even employers who use them think they only have a short-term impact and are less effective at persuading staff to stay over a longer period. This is true. Like, if a person is ready to leave or is considering leaving, if you look at Maslow's hierarchy of needs, pay is very much a hygiene factor. It's not a motivating factor. So if a person's lost motivation to even, do their job, they're not finding it fulfilling anymore, then no amount of pay really is gonna change their mind or make them, or persuade them to stay. Do you understand? So I totally get that. I understand that, and I've experienced it myself. Right, next one. Netflix starts streaming video games. Yeah, gaming is an enormous industry, and streaming giant Netflix could fuel even further growth by serving on-demand games via nearly any device. And this is written by Decrypt. Yeah, so they're only doing a limited test at the moment, but Netflix is now streaming video games directly to devices. Okay. Netflix already has over 70 downloadable games available on mobile. Representative told Decrypt via email and asked whether the streamer would develop a physical controller or support console controllers in the future. Netflix told Decrypt that the company is fully committed to its controller mobile app because users do not have to buy hardware to experience the studio's games. Attention. Okay. So this is a big deal, and you can see Netflix's business model and value proposition changing. For Netflix, I don't see gaming working particularly well. I think they should focus on making better content. Yeah, making better content and outputting better shows. More broadly, video games have vastly grown beyond the perception of them being a niche hobby for a small group of introverts. In fact, research from the Entertainment Software Association has found that as of this year, 212 million Americans play games for at least 1 hour a week. Netflix's expansion into gaming has been years in the making, but by testing the ability to stream playable games to potentially any device that can run Netflix's core video content, it could vastly increase the number of gamers out there and perhaps fill the void of new content, as the WGA and SAG-AFTRA strikes rage on. Okay, I can understand it and why Netflix would look to explore it, but I don't believe it will be a success. I don't believe it will be a success for them. If you look at the major consoles or the major players, for instance, Xbox and PS5, on their systems, you can watch Netflix. Okay, so you can switch between the two. You can play video games and you can switch out to watching Netflix if you want to. Yeah, as a person who used to play video games, and I do enjoy video games, still enjoy video games, but I don't really have the time to play it that much. I want the best experience possible. Do you understand? So I want to play AAA titles and on dedicated systems. I want to have the feel of a proper controller. I don't like mobile games like that. Like if I'm having a gaming experience or a gaming period set aside, maybe an hour or 2 hours, I want that to be the best experience possible. Okay, so the next story is Bitcoin being shaken out of low by SpaceX sales worries, and also Bitcoin plunging 11% in worst week since FTX's collapse. Yeah, Bitcoin slipped below 26,000 amid the crypto market mayhem. Okay, this was on Thursday, right? You saw a massive sell-off in Bitcoin. Okay, and this was what, over $1 billion got liquidated in this move. Now, some are saying it's because, SpaceX sold off a lot of their Bitcoin positions. They written down 373 million in the past 2 years and has sold some coins. But I don't believe that's enough of a catalyst for Bitcoin to drop significantly like that by 11%. Okay, fair enough, Elon Musk, has a power to move markets, and people pay close attention to what he and his companies do. But I don't think that's enough for Bitcoin to plummet so much. I believe it's because of inflation. Okay, inflation fears and fears that the Fed will continue to raise interest rates, or interest rates will continue to stay at the level that they are. They're not, you won't see the Fed dropping interest rates up until 2024, I believe, or start to consider it. So that's why I believe that there was a sell-off in Bitcoin and Bitcoin started to plummet. Okay, because obviously we're in the second quarter of the year now, and many believed, even myself believed, that the Fed would start to pivot. Okay, but apparently that's not the case. And you've also got the wiping out of a lot of leverage. Okay, the derivatives market, you had a lot of open interest positions of people going long on Bitcoin. I don't trade derivatives, and I don't advise that any of you take out leveraged positions in Bitcoin. That's the quickest way to end up bankrupt. Okay, only spend what you have, what you can afford. Don't play with leverage at all, because these exchanges are set up, and you have big players set up to just clean you out, wipe you out, take your money. I think that's part of the reason why. And also you've got news that there should have been a decision made on the Grayscale versus SEC legal battle, where Grayscale was suing the SEC for not converting the ETF trust into a spot ETF. Okay. Now, news was supposed to come out, a decision was supposed to come out of that on Friday, but it didn't materialize, which has just pushed things back even further now. Okay, so on top of there not being a decision made with Grayscale's spot ETF, we also didn't have a decision made on ARK Invest's spot ETF decision. That's been delayed and pushed back as well. So it's just totally taken the enthusiasm out of the market. It's just fizzled out. So you saw massive drops in Bitcoin. You saw massive drops again in other cryptocurrencies as well. The whole market really. Apart from Ethereum, Ethereum didn't drop significantly because of the news that the SEC would approve or look to approve Ethereum futures by October. Yeah, Ethereum future ETFs by October. In regards to this news, it is positive for Ethereum and the crypto industry as a whole. But again, it's just more derivatives market. Yes, it opens up access, but really you want people, or you want customers to be actually holding the underlying asset. Bitcoin's already got future ETFs as well. So I don't particularly see it being a major catalyst, but it's positive nonetheless. Small crypto exchanges take advantage of Binance's decline. Companies such as Huobi and KuCoin have increased market share this year. Small cryptocurrency exchanges rated as having higher levels of risk for customers have been the main winners from Binance's hefty decline in market share in the 5 months since US regulators charged it with violating federal laws. In contrast, exchanges that are rated by CC data as top tier, due to them surpassing a minimum threshold for acceptable risk to customers, have suffered a fall in their collective market share from 80% to about 68% since the start of the year. In the same period, Binance, the industry leader, has fallen from 56% to slightly more than 40%. A shifting landscape shows traders' sensitivity to 2 lawsuits filed against Binance by US regulatory agencies this year. For a large portion of crypto traders, Anonymity and ability to exchange funds that may have come from a high-risk source is more important than trading on an exchange with a reputation for compliance. And this is interesting because for crypto and Bitcoin to be accepted, there's anti-money laundering rules and KYC that needs to be done. So, for a large portion of crypto traders to, want to stay anonymous, it raised concerns. And this is why I don't believe that the SEC will be approving a spot ETF anytime soon. CC data defines top-tier exchanges as those that have the most robust approaches to protecting customer funds, security, and anti-money laundering standards, to name a few. Yeah. Maybe an opportunity for smaller exchanges because they're still operating under the radar and they haven't been sued by regulators. CK Zeng, co-founder and chief investment officer at crypto hedge fund ZX Squared Capital, said it may be an opportunity for smaller exchanges because they're still operating under the radar and they haven't been sued by regulators. If I'm a newcomer to crypto and I don't know how exchanges work, I would at least get scared if I saw one getting sued. If I'm a newcomer to crypto, I would only want to be on the exchanges which have robust approaches to protecting my funds, security, and anti-money laundering standards, right? And if I see exchanges being sued, whether or not it's Binance or Coinbase or these top tier exchanges, I wouldn't want to be involved in crypto at all. Like, I'll wait on the sidelines until there's regulatory clarity. Okay, I'm not just going to go and divert to an exchange which is shady or is not a top tier exchange. But it's interesting. I found that quite interesting still. And it will only be a matter of time until Huobi and KuCoin, are not flying under the radar anymore. Okay. SEC is making an example out of Binance and Coinbase. That's what it is. Next one, strong US economy forces investors to rethink on interest rates. Prospect of inflation staying higher for longer and poor summer liquidity drives surge in bond yields. The strength of the US economy and the specter of persistent price pressures have fueled a big surge in borrowing costs on both sides of the Atlantic as investors rethink the trajectory for global interest rates. A global bond sell-off pushed benchmark US 10-year Treasury yields close to their highest level since 2007 this week, while equivalent UK gilt yields hit the highest since 2008, and 10-year French government bonds reached levels not seen since 2012. The rise in yields, which move inversely to prices, come on the heels of a slew of data that suggests the US economy may be stronger than previously thought, and in turn, inflation may now take longer to moderate. That has prompted investors to push out their expectations for when central banks will be able to start cutting interest rates. Yeah, more jobs, more jobs need to disappear. More companies need to collapse. Okay, I believe interest rates are going to remain high at least until the end of the year, and we won't see the Fed start reducing interest rates until 2024. Okay, now when interest rates rise, asset prices fall. While US core inflation, which strips out volatile food and energy prices, has cooled in recent months to 4.7%, it remains far above the Fed's target. The Fed's target is 2%. The UK is still grappling with persistently sticky price pressures, with core inflation at 6.8%, while in the Eurozone the rate is 5.5%. Higher commodity prices across the continent have helped push up inflation expectations to decade highs. The labour market also remains tight, with average hourly earnings in the US increasing by 4.4%. You are seeing wage pressures everywhere, and they put pressure on employers to charge higher prices. It's just not conducive with a quick drop back to target inflation. Traders are now betting that the Fed funds rate will stay close to the current target rate of 5.25 to 5.5% until the middle of next year, that the European Central Bank will deliver one more 0.25 percentage point rise by the end of the year to 4%, and that the Bank of England's rate will peak at 6% by early next year. So if we look at the Nasdaq's at 51. Yeah. This is back in March 20. I don't see us. You can see the trend here within the stocks. Obviously, we've had a sell-off recently. We're on a downward trend. I don't see us breaking up past the 60-day EMA again. Okay, I believe that we're going to continue going down. I expect us to be back at 40. Yeah, to be back at 41 by the end of the year. So here you can see that, we dropped during the pandemic. The government printed so much money into the market that we went on a ridiculous run, which finished in November 21. And then we started raising interest rates from then, really. I believe we're going to go back to 40. That's just my opinion. XRP ruling needs appeals court review, SEC says. Now, I've said previously that I believe the SEC will appeal this judge's ruling. It just doesn't make sense to me. Like, I would consider myself to be a retail trader. And even if I'm buying from a secondary market, if we're looking at intended use cases, right? Even though XRP may deem themselves to be a utility token and not a security token, the only reason why I'm buying off an exchange, or the only reason why I'm buying the token or the asset, the only reason why I'm buying the asset is because I believe if I purchase this asset, the work that Ripple Labs does in developing the protocol will lead to growth within the asset value, okay? And I'll make a return on the investment, on the money that I put in. That's the whole reason why I purchased it in the first place. Do you understand what I'm saying? And so for me, it does fulfill the Harry criteria. Now, a lot of crypto projects will say that it's not a security token because it has utility. It has other potential use cases. There's other properties which allows the asset to be used for a multitude of purposes. But as far as I know, from my own experience and from the experiences of my friends and everyone else I know that's involved in crypto, we hold on to the asset. We don't really use it. We hold the token and hope that it appreciates in value. Unlike gold, where you can use it to make stuff. Okay, you can use it to make jewelry. You can't do that. You can't really do that with crypto. Digital assets such as cryptocurrencies, your Bitcoin, your Ethereum, as far as I know, people just hold it. The primary use case is just to sit there and hold in your wallet, in your ledger, okay? But those are my top stories for this week. There hasn't been a lot really to talk about or discuss, apart from inflation and the Fed, sticking with high interest rates, which is big news, to be fair. For a deep dive into individual companies and technical analysis, subscribe to the Patreon. Link will be in the description below. If you enjoyed this video, if you found it useful, if you found it of value, hit the like button and share it with a friend. Don't forget to subscribe and hit the notification to be notified about new releases dropping. I hope to drop a video at least every Sunday, okay, covering the events of the week. Block 101, home of value investing in disruptive innovation and tech. Enjoy the week.